Hey YouTube, what's happening? Chris here. Want to bring you all an update on LITECOIN. We're still blasting off, guys. This is incredible. We're at $5,108. We're up 4.21% right now, and I just had some key areas that I really want you guys to keep your eyes on. Okay, we're going to look at the upside, we're going to look at the downside, and we're going to look at the sideways like we always do. And what I'm going to do today, I'm actually going to start with the upside, and then we'll look at the downside, some different areas that I'm seeing. And if you guys could like, subscribe, hit that notification bell if you like what we do here, and we'll dig into this. And also, guys, I apologize if I'm a little bit shaky or whatnot in terms of my charting here. I'm using my mouse. I'm still getting used to that. It's one of those wireless mouses. And also, yesterday, my weight restriction came off for my intestinal surgery. So it was about 3 months, guys, where I couldn't lift above 35 pounds. And as you guys know, I'm a personal trainer and a specialist in fitness nutrition, so I really love working out. And today was one of the first days that I actually could go a little bit over that weight restriction. So I was pushing some heavier weights, and it just felt good. I'm a little shaky right now since it's been a while, but we'll get back into it just like anything, just like charting, all that. You got to ease yourself back into it, and we'll get after it, guys. So I appreciate all the prayers too throughout this time. So guys, what we're looking at right now, what I really wanted to pay attention to, okay, so we took this swing high right here to the low, and now what you're seeing is we're coming up on this 0.618. And a lot of times, if you go back and you back test this, we've had these reactions. So we'll fall like that, then we'll actually come back up to the 0.618 before some profit is taken. So just keep your eye out on that spot, because it also coincides with this little area right over here. Okay, so that'd be around 52.51. So potentially we could run up to that area, guys, before there is some profit taking. But I would just look at that as a profit taking zone. If you go back and you really back test the chart, which I actually hope to get into with you guys a little bit here, the 0.618 is a lot of times where people were taking that profit on the reaction. So pay attention. And as you know, we are getting overextended here. This is one heck of a move that has really came in. So typically, say there was some resistance right here, the 0.618. A lot of times you'll actually have a retracement back down to this 0.382, which is also where that red line is that I had that we broke out of. So that would actually be a beautiful spot. If we could consolidate upon this right here before moving up farther, that would be ideal, guys. Because remember, whenever you have one of these big, long, Jack and the Beanstalk type deal celery sticks come in, there's usually a retracement at some point, guys. Just remember that. And we're also going to look at Fibonacci on the other way as well, and I'll show you how this coincides. So what I was looking at as well, I took my Fibonacci this way, and we'll go just from the bottom here, from this move, this main move, and we'll pull it up to where it's at. And I'm going to change the color of this so you can see the difference here. But do you see that 0.382? It's lining up all throughout here with that red line, with this 0.382. So that could be a beautiful spot around that 44.63 to get a nice strong bounce off there if we do retrace to that point. There's a lot of convergence there, okay? So remember, profits will start to be getting taken very soon. All right, could be another 2 or 3 days, but it's going to happen. And also, a lot of times, guys, this purple line that I had, this trend line, when you break out of this, I mentioned this earlier in the video that I was doing today for my car, a lot of times it'll be about 7 to 9 days, but you actually will come back down and you'll back test around this area, basically where the breakout took place. Okay, I'm not saying that has to happen, but that's a scenario. So you either break out and run like we're doing here. Sometimes you'll break and then you'll come back and you'll test even like this 20 EMA there. Or sometimes you can actually have a break like this and then fall back through. But I don't think that's the case right now, because we broke hard on good volume. If we broke out of there on some weak volume, then maybe we could fall back down through. But this is some serious volume. These are people putting money in, and this is a serious move past major resistances. And the major resistances, guys, that red line that I had, you think we hit it once here. Up here, we couldn't even get to it, and we were just traveling sideways for so long, and then this explosive move once that trend line broke. Trend line breaks are so powerful, guys. Really, you have to study about them. I read a whole PDF file about just trend line breaks and the power of them, and really, you could be an extremely successful trader with just trend line breaks alone, even on the short term, medium term, or longer term. So that's something that I want to keep my eye on. And guys, right now we're on the 12-hour chart. All right, I think the 12 is the best because our close is not going to be, at least my time, for another like 7.5 hours. So I want to see what's happening. Next thing, let's take a look at the RSI and see how overextended we're getting. All right. So with the RSI, sorry here, guys. There it is. All right, so with the RSI, we are very overextended here on the 12 hours. We're at 93, so anticipate some profit taking at some point, guys. And the reason for that is just professional traders who may have let this run overnight just to see what happens. They're going to start seeing that, you know, the price went from $4,000 up to $5,000. There's going to need to be some profits being taken. And also some guys will probably jump into some shorts around that 0.618 that's also coinciding over here. But that's just something to put in the back of your mind there. Just really think about it. And also realize this RSI has not been up this high in, let's see, I think since that last serious move, guys, when we had that blow off top. So you even look where we're at right here. I mean, we're up higher than we've even been throughout this run. So expect some type of retracement or pullback at some point, guys. It's very possible that it could happen because we're going to have to get up above right here, this $6,000 range, and that is strong overhead resistance. We were basically in this $6,000 range since we went from February 5th, 2018 all the way to December 18th. Or I'm sorry, December 2nd, 2018. So, I mean, that's a heck of a long time for that break to take place. So, you know, guys, keep that on your radar. And another thing that I wanted to show you was this 0.618, how we were having these reactions back into that 0.618, okay? And that's why I'm just looking at it. I think it's something that you need to pay attention to. So if this move here, guys, so we'll take the high to the low, and look where profit was being taken. Right there, 0.618, right? Let's do another one. So let's go up a little bit more. Then let's go around this one right here, guys. Look at this, 0.618. So, you know, it definitely could happen again. And I just want you to be aware because of how overextended we are. You know, if we weren't this overextended, then maybe we wouldn't stop at that 0.618, you know? But we've had a jack in the beanstalk, and typically, guys, you see even these moves. We'll hit these moves, and you'll consolidate a while, sometimes even pull back, then you'll make another move, and then look at these drops. I mean, here's a huge move, a drop. So just be aware of that. I know everyone's excited. I'm excited. We want to dance on the table with all the hodlers and everything else, but we do need to be aware that there has to be a cooling off period. Nothing can go straight up. Nothing can go straight down. There's always going to be reaction. There's always going to be profit taking. And those are the type of things that I like to look at. Ideally, guys, if we could consolidate, have a pullback onto this red line, move for a while here, and then power back up, that would be amazing because it's going to take a lot to get up over top of this. And if I draw a horizontal line here, this is basically what I'm talking about. So we'll say this area right there in red. So do you see how it would be hard just to continue this move straight up into that without having some type of pullback to try to get up above it? Now what I'd like to see is that retracement down onto here, then another bout of volume like this come back in to finally push us back up. And that's a big area. You know, getting over that $6,000 mark, guys, that could really significantly, I mean, this is a huge step in ending the bear market, getting over that $4,500 range, but it would really signify that we're for sure out of this bear market if we could start closing up above that. We're up above now the 200-day moving average for Bitcoin, which is a big deal. I mean, that's something very special, guys. We've been waiting to get that, and you can see it right here. So that's another area that you'd say, are we going to pull back onto that and test it again? Because a lot of times it even happened with Litecoin. You'll get up here and then you'll come back and you'll have to back test it, see if we can hold it, and then move higher, right? And then also take a look at all these golden crosses that were taking place. I'm sorry about that, guys. The 100 just left me there. But all these golden crosses that were taking place, we had the 20 over top of the 50 moving average right there, and now we're just riding up. And remember how strong this 20 EMA is, guys. A lot of times we have pullbacks onto that. So in the bear market, it was acting as overhead resistance, and now what we want to do, we want to be able to treat that as support. And it's important that we find support off that because most likely, guys, we're going to back test that 200-day moving average. We have to firmly test it. We broke through it. Remember, any resistance like that, you break through it, and then that resistance, you want it to turn to support. We don't want to break right through that and then fall back down, okay? We want to stay up above that the best that we can. But this is what I'm looking for on Bitcoin, guys. And then what I'm looking at is also the Bollinger Bands. Remember how overextended we probably are on these alone. So yeah, we're way outside the band here, guys. And typically, guys will start taking profits when we really get outside of those Bollinger Bands. But we knew a break was going to happen either to the upside or downside when these bands start to get very tight. All right, we either would have saw rejection off this purple line and then we fall back down, or we would have got that break, and we ended up getting that break. I mean, look how long this purple line's been intact, guys. Let me get the Bollinger Bands off here. All right, so this purple line, we could not break it. I mean, this started, let's see, February 18th, 2018, and we've had nothing but rejection from it until March 25th, 2019. So this is a significant trend line break. And if anyone tells you that it's not a significant trend line break, guys, you got to be very aware of who you listen to. And truthfully, always have a plan for that upside. If it continues to run harder, guys, have that plan for it. If we have that pullback, have a plan of where you may go long on it. You know, it's been so weird just even seeing this, because for the longest time, you know, 15 months, we've been having lower highs. And with those lower highs, you know, we've been using bear market techniques. So now it's kind of different that we are actually switching into that potential bull market to where you're going to want to be buying the dips. You don't want to be buying the dips in a bear market because price is continuously going down. Unless you're selling these reactions. So you have a big move like this and then you buy the dip here, but you know that once we come up around this range, you're going to let them go. That's fine. But in terms of hodling, you don't want to be buying those dips in a bear market. That's not a good thing. You want to buy dips in a bull market. That's the key. But you know, we had decreasing volume, and now we're having that, we had that trend line break on the volume as well. If I draw that on there. See this, guys? So we were basically like right in there, and then you had that break. So same thing as a trend line break, and the volume broke right up out of there. So let's pay attention to these things, guys. Let's really look back, and also pay attention to that 0.618 around that $5,200 mark. We're going to see what happens. God bless each and every one of you. If you like what we do here, like, subscribe, all that. We're up above the 200-day moving average again. Guys, that's a beautiful thing, and I'm happy to be here with you. We've really endured for a long time with just seeing rejection off it, so I'm happy to see that. Take care, my friends.